So I'm arguing in an 80-20 portfolio, half of the 80 should be in crypto for an aggressive investor. Even conservative investors ought to have a 10% exposure. You need to own a portfolio of the future rather than relying on one of the past.
Hey everyone, welcome back to the show. I have the pleasure of having Ric Edelman joining me this week. He is the founder of one of the largest independent RIAs in the nation and was named the #1 independent RIA in the country 3 times by Barron's, recently won a Lifetime Achievement Award. Ric, you're going viral lately because of your white paper and the percentage allocation you're recommending to crypto. So really excited to have you on the show. Thanks for joining me.
Thanks, Natalie. It's my pleasure to be with you. Thanks.
Well, let's get right into it. First of all, maybe share a little bit about your background. How did you get to be such a highly acclaimed independent RIA?
Well, it certainly wasn't our intention. My wife Jean and I founded our firm way back in 1986, and we did it because we were really angry. We were not in the financial field. I was a journalist writing in the financial trade press, not an advisor. And as a young married couple, we knew we needed financial advice. We wanted to buy a home like every newlywed wants to. The advisor we went to ended up being a crook. He told us to commit a felony in order to qualify for a mortgage by lying on our mortgage application. And it so infuriated us. We said, you know what, we're going to learn how to do this ourselves, and then we're going to teach others what we've learned so they can avoid our experience. And that was the reason we founded Edelman Financial way back in the 80s. And our goal was simply to serve people who were underserved, who didn't have access to financial advisors, because we didn't have any money in our 20s, and advisors generally don't like to serve people without any money. So we had to teach ourselves, and then we sought to help others who were like us. And our attitude was, we'll keep growing to meet the demand. And when demand stops, our growth will stop. Well, 35 years later, the growth has never stopped. The demand has never stopped. And along the way, we are now managing the firm over $300 billion, serving 1.4 million households. We're just excited to have been able to make the impact that we've made.
What do you think set you apart? I mean, how were you able to allocate these portfolios in a way that justified being named the top independent RIA in the country?
Well, there are a couple of reasons. One is that we were serving an underserved market, what we refer to now as the mass affluent, people who don't have a whole lot of money but are trying to achieve financial security for themselves and their parents and helping their children. And we did it predominantly through financial education. I hosted thousands of seminars, now webinars over the decades. I hosted the longest running radio show with 1 million listeners a week that was airing nationally. I was named one of the 100 most important radio talk show hosts half a dozen times by Talkers Magazine. I appeared on Oprah 5 times. I hosted a series of specials for public television. I ended up writing 13 books. My 14th comes out in Q1. And I'm probably the best-selling author in the financial advisory space, with over 1 million copies sold in 8 languages around the world. So we developed a reputation for providing financial education, financial information that was objective, unbiased, serving the best interests of the reader, the viewer, the participant. And people like the message. And it's kind of like your experience, Natalie, and why your show is so popular. If you serve the people you're trying to reach, that'll resonate, and people will respond in kind. So we've been very, very fortunate in our 30-year career.
Coin Stories is proudly brought to you by Gemini. Investing in Bitcoin has never been easier with Gemini's Orange Bitcoin credit card. Earn up to 4% back in Bitcoin on everyday purchases like gas, dining, groceries, and more, with no annual fee, no foreign transaction fee, and no exchange fees on your rewards. This summer, also get 10% back in Bitcoin at golf courses. Plus, sign up today and get a $200 Bitcoin bonus when you spend $3,000 in your first 90 days. Apply now at gemini.com/Natalie. Next up, a quick word about my friends at Bitwise. They've been educating investors on Bitcoin for over 7 years, have over 10 billion in clients' assets, and a team of 100 plus. Their weekly newsletter is a must read. It's written by their CIO, Matt Hogan, one of the best minds in the business. I highly recommend it. It's witty, bold, and quick. Takes just 5 minutes to read each week. So head over to bitwiseinvestments.com/CIO memo. And always, of course, carefully consider the extreme risks associated with crypto. Coin Stories is is also brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and high-performance computing for AI. Bitdeer trades under the stock ticker BTDR and boasts more than 2.5 gigawatts of electrical capacity across 3 continents. Learn more at bitdeer.com. All right, back to the show. I've been learning more about RIAs and that whole world, and I've been surprised to learn that they really don't recommend allocating to Bitcoin. They might invest in it themselves. The wealth advisors might have some Bitcoin, but they don't actively recommend it. So can you talk a little bit about why?
Yeah, I started my journey into Bitcoin back in 2012, and I wasn't looking for it. Like nobody looks for Bitcoin; it just you come upon it. And my first reaction was like everybody's, "Huh? Digital money? What's that? Who cares? Why do we need it?" But unlike most who just dismissed it out of hand, I'm always curious. I don't believe that you should be managing money for others if you're not curious. And so I spent 2013 learning about this and concluded pretty quickly that this is a transformative technology that's going to revolutionize commerce on a global scale. And so in 2015, I created DAC-FP, the Digital Assets Council of Financial Professionals, as a crypto education company. We don't manage assets. We're not recommending anything in particular. We're just teaching people about this asset class, how it works, how they can incorporate it into their practice. And what I've discovered is that most advisors are oblivious to this technology. They don't understand crypto or Bitcoin or blockchain, and they're largely dismissive of it. And the reason I have found is twofold. Number one, advisors are mostly successful. They have a big book of clients. They're managing a lot of money. Clients are happy. They're successful. They're playing golf 1 or 2 days a week. Why bother learning something new? Second, and this is most important, Natalie, their firms don't allow them to recommend it. So while the surveys are telling us, and we do a lot of them at DAC-FP, that half of advisors personally own Bitcoin, less than 20% are recommending it to clients. And the primary reason is that their compliance departments won't let them do it. So that is changing finally because we have the Bitcoin ETFs now for about a year and a half. We now have a major change in regulatory attitude at the SEC, CFTC, all thanks to the Trump election in November. Congress is now favorable to crypto for the first time ever. We're seeing legislation being developed for the first time. So firms are now recognizing with the incredible growth in this asset class and over $3 trillion in assets, Bitcoin 2/3 of that, that firms can no longer ignore this. Their own clients are investing, their own advisors favor it, and people want it. And firms are now racing through their compliance department, the risk management committee, the investment teams to figure out how to add this to their stable of model portfolios. Over the next year, we're going to see this become the norm in the investment advisory field.
Well, you say racing, but it honestly feels so slow. It feels like a little trickle. Do you think that the floodgates will really open? Is it just a long process to get the compliance teams and everyone on board so that everyone can start recommending it?
It's really true. I mean, I get it from an outsider's perspective, but having run the largest RIA in the nation, I can tell you that the financial industry moves really slowly. We are bureaucratic. There are lots of lawyers, compliance officers, risk managers engaged. They first and foremost want to make sure you're following the rules. And there haven't been many rules issued by the SEC or FINRA, the two chief regulators. You also have had a dearth of product. Until the Bitcoin ETFs came on the market just over 16 months ago, there wasn't any product available to sell within the advisory community. So now what's happening is the products are available, the regulators are behind this, that's giving the firms the green light to engage. So what do they got to do? The CIO, Chief Investment Officer, has to green light this. That takes them time to get their arms around it, learn about it, understand it, agree with it, and then kick it to the investment committee. They generally only meet 4 times a year. And they need typically 4 to 6 meetings to approve something. That's 18 months. Then it goes to the C-suite and the board. They have to say yes. Boards only meet 4 times a year. That's another year of process. So it's going to take, a year or two for the bureaucracy to proceed. But once they start to say yes, get out of the way because you're going to see a flood of assets going into this space. And as we know in the world of Bitcoin, as the assets flow, the price rises.
That's right. Well, let's talk about some of the things that have held people back and maybe are still holding people back. You put out this great white paper at the start of the year, the 6 mistaken beliefs that are keeping you from buying and recommending Bitcoin. And if you don't mind, let's just go through all of them and maybe summarize some key points, because I find these to be really important. And I run into people every single day that run into one of these issues. Number one, I think it's the ego, right? You have to admit that you're wrong. What do you have to say about that?
Yeah, I mean, to buy Bitcoin at 100,000, you have to admit that you were wrong not to have bought it at 15. And nobody likes to admit they're wrong. My response to that is, you weren't wrong when you didn't buy Bitcoin at 15,000 or 1,500 or $15. Back in 2010, 2012, 2017, 2021, Bitcoin and crypto generally was still extraordinarily unpredictable. We know of the volatility. We know of the scams and frauds. We've also had questions as to whether the government might ban it, because the Biden administration hated it. Gary Gensler, the head of the SEC, abhorred it. We knew that Congress wasn't creating any laws to clarify this. We knew the IRS didn't have any regs to explain crypto taxation. And we didn't know if this was going to stick around. We didn't know if there would be adoption institutionally. We didn't know if technologically it might become obsolete. So it wasn't that you were wrong not to have bought. You were prudent. You were careful. And that's your job as a fiduciary with your client. So you weren't wrong then. What you need to simply recognize is that that was then and this is now. The world of crypto has radically changed. We have a Trump administration that is strongly supportive. Every member of the cabinet personally owns Bitcoin. Every economic appointee, secretaries of Treasury, Commerce, Labor, all are strong crypto supporters. The chairs of the SEC, CFTC, OCC, all are major supporters of crypto. Majorities in both House and Senate of both parties are strong crypto supporters. So all of the objections and obstacles and worries are now gone. We're now seeing institutional engagement like never before. Banks and brokerages, for the first time ever, can trade and custody crypto for their customers. They're all racing to do so. We now have institutional investors like endowment funds, pension funds, family offices, sovereign wealth funds. They're all allocating for the first time. So you weren't wrong not to invest then. It's okay to invest now and be right.
I do think that some people have trouble kind of admitting to themselves that, hey, I could have had this at $10, $100. I think Peter Schiff is actually in that boat, and then purchasing it so much higher, but there's still so much upside to go. And so that brings us to number 2, which is, am I too late? I try to tell people, were you too late buying Apple when the first iPhone came out? No, there's still so long to go. So what do you say to that?
You're exactly right, Natalie. We have to remember that less than 5% of the world's population owns Bitcoin today. So sure, the price went from 0 to 100,000. That growth rate, 100 million%, that'll never happen again. But so what? You didn't buy Amazon in 1999. Is buying Amazon today too late? Of course not. We all know that the best time to buy any asset is last year. And we all lament that we didn't buy real estate 20 years ago. I'm sure your parents bragged to you at the price they paid for their first house 20 or 30 years ago. And boy, I wish I could buy real estate today at those prices. The past is always cheaper. And that means that the future is always higher. So is it too late? Absolutely not. We're in the second, maybe third inning. We're just getting started.
Yeah, that's right. Now, the volatility can scare people. Obviously, in the world of traditional finance, people embrace volatility. They can profit on volatility. But for the average person, it can be very scary. There are significant drawdowns, 70, 80%, not uncommon. So what do you say about volatility?
Well, yeah, I mean, if a financial advisor hears from a client who says, I'm afraid of the stock market because of the volatility, the advisor knows how to respond to that question. We tell the client, this is why we diversify. This is why we have a long-term time horizon. This is why we rebalance. This is why we dollar cost average and tax loss harvest. Well, the same is true for crypto. So the very reason you like volatility in stocks, because when there's volatility, you can benefit from that through modern portfolio theory, through diversification and rebalancing. Well, crypto is volatility on steroids. So if you like volatility in stocks, you have to love it in crypto. Turn volatility into your friend.
I really am glad that you brought in number 4, because this is something that I get asked probably on a daily basis by people who don't own Bitcoin. They're scared about quantum computing. So you say in number 4, quantum computers will be able to break into the network, allowing criminals or rogue nations to steal all the money. That's the myth. But it's actually not factually correct. And I love what you had in here about the qubits. Maybe you can share a little bit about that data.
Yeah, everybody's focusing on quantum computing, and rightly so. And you've heard the stories that they will eventually build a computer that can hack the Bitcoin codes and
Mhm.
steal all the Bitcoin. It's really rather silly. I get the fear mongering of it, but it's really a silly point for a couple of basic reasons. First of all, they're calculating that it would take about $6 billion to build that computer that is capable of defeating the Bitcoin blockchain. Well, if you've already got $6 billion, why do you need to bother going into the Bitcoin blockchain in the first place? Because if you do steal all the Bitcoin, all you're doing is making it worthless. Because
Worthless.
who are
Yeah.
you going to sell it to? Nobody would buy it because they know you can just hack it all over again.
Right.
Why wouldn't you go after Bank of America's deposits? That's 3
Mhm.
trillion, because now you're holding on to cash that you steal from the bank that would still hold its value. So go after Wells Fargo, go after, Citigroup. Don't go after the Bitcoin blockchain. But more importantly, if I had a quantum computer that could hack the Bitcoin blockchain, wouldn't I much rather hack, oh, I don't know, the nation's electrical grid, or the air traffic control system, or the Federal Reserve, or the nation's nuclear codes? Why would I go after something as trivial as Bitcoin when I could really do something cool as a rogue nation or a terrorist? So I think the bottom line is, if you're worrying that quantum computing is going to destroy Bitcoin, we've got much bigger problems to worry about. And here's the final point. If somebody can use quantum computing to defeat the Bitcoin blockchain, why can't we build a quantum computer to
Right.
defend it? You
Yep.
show up
Make
with
it
a 10
quantum
foot
resistant.
ladder, I'll build a 12-foot wall.
Mhm. Right, exactly. Make it quantum resistant. And right now, it would take about 4 million qubits, I believe you wrote in the paper, to hack Bitcoin. That's, I mean, many, many years away. And of course, we would try to get ahead of that, right? Make Bitcoin quantum resistant. And it would pretty much hack everything before Bitcoin. And why would a company like Google, this is something Michael Saylor has said, why would Google release essentially a quantum computer that could hack all of Google, all of these
Exactly.
corporations, all of these banks? So I really do think it's an overblown fear, and I'm glad you addressed it. All right, number 5, the people promoting Bitcoin are engaging in massive pump and dump schemes. Early investors want others to buy so they can cash out before Bitcoin collapses. This is the ultimate Ponzi scheme myth, right?
Yeah, and it doesn't make any sense. It stretches credulity to argue that the nation's endowments like Yale and Harvard and Brown that are all investing in Bitcoin are con artists, that
Yeah.
the world's billionaires who are investing in Bitcoin, that sovereign wealth funds, that some of the smartest, most brilliant technicians on the planet, that majority of Congress and the entire cabinet of the administration are all somehow colluding to engage in this fraud. It's just silly on its face. Oh, wait, here's an idea. Why don't you just join them and get rich along with them?
That's a good point. All right, the last one, buying Bitcoin is an extreme speculative bet, and I don't believe in taking big risks with my or my clients' investments.
Yeah, the advisor who says that is typically a passive investor. And most advisors are these days. Rather than trying to beat the market, pick the best stocks, most advisors recognize the folly of that, and we instead try to be the market. We invest in passive portfolios that reflect the broad array of stocks, bonds, gold, oil, commodities, foreign assets, etc. And we invest in the S&P 500 to own the market. Well, if you're going to be a passive investor, recognize that crypto is now about 3% of the nation's wealth. So if you look at the total value of stocks and bonds, that's about $110 trillion. Bitcoin's market cap is about 3 trillion, roughly 3%. So if you don't own Bitcoin, you're essentially shorting Bitcoin. So if you are a passive investor and you merely want to own the market, your portfolio should have about 3% in crypto. That would be the market. So the speculation isn't in buying Bitcoin anymore. The speculation is in not buying Bitcoin. That's the big risk.
This episode is brought to you by Casa, the leader in Bitcoin self-custody solutions, helping people like me secure their wealth with simple, powerful multi-key vaults. And now Casa is here to help businesses and even governments do the same. Introducing Casa Business, a secure, easy-to-use 3-key vault designed for small and large businesses with team signing capabilities and a web dashboard. Start your Bitcoin treasury the secure way and protect your assets. Get 10% off your Casa plan at casa.io/Natalie. Up next, Bitkey. Bitkey is a Bitcoin hardware wallet with multi-sig security, inheritance, and a recovery system designed for real life. No complex setup, no seed phrase, just true self-custody without the stress. It was named one of Time's best inventions in 2024. Use code STORIES for 20% off at bitkey.world. Next up, the Bitcoin way. Bitcoin is only freedom money if you control it fully. The Bitcoin Way can help you learn the skills to properly secure your Bitcoin in 100% self-custody with zero counterparty risk. Go to thebitcoinway.com/Natalie to speak one-on-one with the best experts. Your security and sovereignty are priceless, so don't gamble with your future and peace of mind. Want to reach millions of Bitcoin users? Speed Wallet makes it easy. Launch your app on Speed's mini app store. Publish your app in hours, no coding needed. You can also accept Bitcoin payments effortlessly with Speed. Ready to grow? Publish on Speed today. Visit Speed.app. It's really crazy that there are advisors out there who obviously know that bonds are underwater and they've been tanking in terms of their real value, but it's safer technically to allocate to bonds than something like Bitcoin. Can you speak a little bit to that, how there is really a paradigm shift underway because there's been one sort of safe haven asset for so long, and it seems like on a global level, things are really, really changing when it comes to how we perceive stores of value and where this all is going to go in the future.
Yeah, this is a fundamental issue that most advisors are not aware of, and it's because most advisors are under the age of 70, pretty much everybody. Starting in 1982, which is predating when all of us got into this business. I don't know of too many people who were investing prior to 1982. Most weren't even alive prior to 1982. Starting in 1982, we had a radical change in the bond market because back then interest rates were double digits. We had just gone through the 70s and the oil embargo. We had massive unemployment in this country, unprecedented since World War II. Interest rates were at 14%. Inflation was at 12%. And we know what happened ever since 1982. Interest rates went from 14 to 0 by the year 2000. When interest rates go down, we all know what happens. When interest rates go down, bond prices go up, which means for 45 years, we've had an environment of steadily rising bond prices, plus the interest, the dividends that they pay, plus the guarantee that the issuers offer from the federal government or in many cases, state governments and corporations. So for 45 years, our entire professional careers, bonds have been fabulous, in many cases outperforming stocks, which are much riskier. And many people have grown accustomed to that, believing that's the way it always is, not understanding that that was simply because of a declining interest rate environment. Where are we now, though? We're at low interest rates. Interest rates are 4% thereabouts. How much lower are they going to go? The Fed might cut rates a quarter point, a half a point. Nobody's expecting rates to go down to 1% or 0, which means the declining rate environment no longer exists. Instead, due to inflation, due to the high federal deficit, the incredibly high federal debt, we're worried that interest rates might actually go up. And when interest rates go up, bond values go down, which means the safe haven of bonds, which we've all grown accustomed through our whole life experience, that ain't the case for the next 40 years the way it was for the past 40. And most advisors, most investors have not thought this through to understand this radical paradigm shift once in a lifetime.
Yeah, the secular bull market for bonds is really over, which means that the 60-40 portfolio is changing, which is a good moment to talk about this allocation recommendation that has changed for you. You made some waves by announcing at your conference about a week or so ago that you recommend up to 40% to this new asset class. So break that down for me, because you've got sort of the people that are a little more risk averse and different allocations depending on your needs and your age and your spending habits. So break it down for us. How much should we allocate to something like Bitcoin?
Yeah, I've kind of blown up the internet with this. It's getting massive amounts of attention. My white paper was released, like you say, a week ago following our annual crypto conference. And I'm arguing now that a conservative portfolio should have a 10% crypto allocation. Moderate portfolio should have 25%, and aggressive investors should have 40% crypto allocation. We talked about one part of the reason, the bond market, the fact that bonds are not going to be the safe haven in the future that they have been historically. The other part of the reason is longevity. We're living longer than has ever occurred in human history. In 1900, life expectancy was 47. Today, it's 85. And if you're alive in 2030, the scientists are telling us that odds are very high you'll live to age 100 or beyond, which means retiring at 65 with a 60-40 portfolio is simply out of date. It's not going to generate the returns you need for your money to last as long as you're going to last. So having 40% of your money in bonds is no longer acceptable. And when you look at the typical glide path, by the time a client is 75, they've got 60% in bonds, 70% in bonds. It's ridiculous. It's out of date. It's obsolete. We need to throw away the 60-40 portfolio and replace it with 80-20 or 90-10. And if you're going to have 80 or 90% of your money in equities, we've now got to decide which equities. And we need to be focusing on the companies that are building the future. Exponential technologies, robotics and AI, of course, also 3D printing, big data, nanotech, biotech, bioinformatics, neuroscience, and of course, blockchain and digital assets. So I'm arguing in an 80-20 portfolio, half of the 80 should be in crypto for an aggressive investor. Even conservative investors ought to have a 10% exposure. Nobody has ever said this anywhere. It's kind of blowing up the internet. I encourage you to read my white paper that explains why this is the case. You need to own a portfolio of the future rather than relying on one of the past.
Okay, I have several questions. I actually want to keep on the topic of bonds for a moment. If we're reducing the amount that people are purchasing bonds, what are governments going to do? Because they need people to purchase their debt.
Yeah, but we've got the emergence of stablecoins to replace that. So we're already seeing the beginning explosion of stablecoin ownership. The Secretary of the Treasury, Scott Bessent, says that we're going to see it grow 8x in just the next 2 years. Stablecoins already own 10% of all the U.S. currency in circulation. That's going to grow to 80% in just 2 years. So the U.S. Treasuries are going to be just fine thanks to stablecoins.
It's so crazy to think that, I mean, this is going to essentially back the dollar. The dollar, the demand for treasuries is going to come from stable coins, which are going to be, I think, mandated to hold maybe the short term or longer term. I don't know how it's all going to play out. But it's wild how much our system is changing and how the United States really kind of needs this technology, because they've destroyed really the reason to hold the dollar, right?
And this is why the Treasury Department and the Justice Department and the Defense Department are all huge fans of stablecoins, because it supports the dollar on a global basis. It gets people all around the world putting their money into stablecoins, which are going to be backed one-to-one by treasuries, supporting the continuation of the US dollar being the currency of domination on a global stage, keeping China and Russia at bay. This is hugely important from a political perspective. This is why the State Department cares. From a safety perspective, this is why the Justice Department and law enforcement cares. And from a geopolitical perspective, which is why the DoD cares. This is why the very first crypto legislation coming out of Congress is the Genius Act, creating the guardrails for stablecoin behavior. So yeah, this is going to be hugely important for our nation and why the government is so strongly supporting it.
So let's go back to that 40% allocation. Why not higher? I mean, Bitcoin has outperformed pretty much every equity. Why not bet on something that doesn't have the risks of a company?
Well, at the end of the day, I still am a self-respecting diversifier, like any other financial advisor. So it is coming down really to your risk tolerance. And let's make sure we understand the old axiom that bulls and bears both make money, pigs get slaughtered. So let's be careful that we aren't destroying or putting ourselves at risk of destroying our financial security. We've got a lot going on in our lives, and we want to make sure that you can sustain a market downturn, which might be severe and prolonged, like the last crypto winter was, a 70% downturn that lasted over 2 years. Let's make sure that you have enough liquidity to get you through a period like that, so you don't have to sell at the low. But you're right, Natalie. I know a lot of folks, especially younger, who have the time to recover, where they're 100% allocated to crypto.
Let's make that distinction that you have in your writings between Bitcoin and crypto. And maybe, do you have any lessons that you've learned through navigating the digital assets? I mean, a lot of people have lost money on altcoins, and they would have been better off if they just allocated to Bitcoin. Why diversify into crypto when you could just be Bitcoin?
It's a valid argument you're making, and I won't try to refute it. I will tell you that this is a very hotly debated topic, and there are basically 3 or 4 camps. One camp, which I would even suggest is dominant, is Bitcoin only, for the reason you cited.
And that's
anytime anybody makes an investment in crypto, their first is always Bitcoin. As well, I would agree it ought to be. And for many people, that's enough. Just stop there. Others would argue that diversification matters, and let's go into something other than Bitcoin, such as Solana, Ethereum, Algorand, Polygon. Take your pick of the other coins that are out there. Knock yourself out if you want to do that. Some go a step further, saying we ought to look at proxies. Invest in the companies that are building the technology, companies that are crypto exchanges, crypto custodians, crypto banks, the crypto stablecoin issuers, etc., to build a more diversified portfolio thematically within the space. I will leave it to the investor and their advisor to make that decision. I would simply argue this. Most should pay attention to the weighting, meaning of that $3 trillion, Bitcoin is about 2/3 of it. So in your portfolio, it probably makes sense for Bitcoin to be 2/3 of your crypto allocation.
Yeah, and Bitcoin dominance continues to grow, which is exciting to see. I would love your take on the evolution of the space into these corporate Bitcoin treasuries. As an independent RIA, are you recommending allocation to these new Bitcoin equities that we're seeing?
Yeah, there's no question that that what Michael Saylor has pioneered at Strategy is revolutionary, and many are jumping on that bandwagon, and rightfully so. We've now got, I think, over 100 publicly traded companies that are adding Bitcoin to their corporate treasuries, and we have over 1,800 companies that own the Bitcoin ETFs. And publicly traded companies, that is. And so we're going to continue to see this growing in evolution. Eventually, everybody will be doing this, either exclusively or partly, sometimes majority, in their corporate treasuries. It makes sense. It's fully understandable. Michael is a far better advocate and explainer of why this makes sense and how to do it. And I would encourage everybody to pay close attention to his YouTube videos and his writings on social media, to pay close attention to his arguments, because it's really hard to refute. So sure, I think as part of a crypto strategy, you could argue that owning Bitcoin is one thing, but owning Bitcoin miners, owning Bitcoin treasury companies like Strategy certainly adds to the diversification, but still giving you the predominant dramatic allocation that is directionally correct. So I think they're worth paying attention to.
Some of my recent guests think that we're near a top. They think that things are getting a little frothy. We're seeing the announcement of one of these Bitcoin treasury companies every other week, and that it resembles a little bit of the late 90s before the dot-com bubble popped. Do you see the same thing, or do you think that actually we're still pretty early?
Yeah, I think we're still pretty early. I mean, that's not to suggest there won't continue to be periods of major volatility. I wouldn't be surprised if there's another 30% downturn. But here's the weird thing. The higher the price goes, the longer it continues to rise. And when it does drop, it doesn't drop as much. In other words, I don't believe we're ever going to see a 70 or 80% drawdown again. Yeah. I wouldn't say never to a 40 or even a 50%, but there are now so many institutional investors and sovereign wealth funds and hedge funds and family offices that these are smart people. And when you see a significant drop of 20 or 30%, they're going to recognize the buying opportunity for what it is. And that will put a floor unlike we've ever seen before. So sure, we're going to continue to see volatility, but as the asset class matures, that volatility gets less and less.
You offer a price prediction of $500,000 per Bitcoin by the end of the decade. How did you get there, and how much conviction do you have in that?
Yeah, I'm actually pretty conservative. A lot of other folks say a million by 2030. Michael Saylor says 5 million. But not too many others share their math. I do pretty openly. So I'll tell you very quickly and easily how I get there. If you take a look at the world's global assets, the total value of everything, the value of stocks, bonds, real estate, gold, oil, commodities, you name it, add up the total value of everything, it's about $800 trillion. Now, if you take the owners of all that stuff, you own a little bit of it, I own a little bit of it, we all own a little bit. If all the owners of all that stuff allocate just 1% of their portfolio to Bitcoin, that would be a flow of $8 trillion. That would put Bitcoin at 500,000. Simple as that.
Got it. Yeah. I mean, I've actually seen numbers that go as far as saying that we're approaching 1 quadrillion in terms of assets, which is crazy to think about. But I think that we're actually kind of ordering capital markets with Bitcoin. People are going to start to borrow against Bitcoin increasingly, use it as pristine collateral. Do you see a world where you have clients who are essentially using Bitcoin to purchase a house by drawing on the value of it, how much it's appreciated, in the same way that maybe they've done so with other assets?
Yes, and in fact, we're starting to see permissions being contemplated for Freddie Mac and Fannie Mae to allow your Bitcoin holdings to be used as collateral for mortgages. So yes, there is no question that as part of the mainstreaming, you can already collateralize your stocks and your bonds and your real estate. Why can't you collateralize your crypto? So it'll become a routine process of a margin account. We're already seeing an extraordinarily robust options market, which provides leverage in the crypto space. So sure, the crypto is going to be like every other asset. Wealthy people are already collateralizing their artwork to be able to generate the cash they need without having to incur tax liabilities. We're doing it with real estate and stocks and bonds. There's no question we'll do it with crypto too.
So is Bitcoin the best investment you've ever made?
Yes.
What's the worst?
Oh, all the investments. I'll tell you. I'll tell you the worst. Block. I was an early investor in Block, and Gensler killed it with its $100 million fine that put it out of business, and my investment in Block went worthless. So this is a perfect illustration of the need for diversification, the need to recognize that government policy can adversely, unexpectedly, and severely impact adversely the value of an asset, and why you must never invest in anything that you're not willing to lose money on. So yeah, it's all part of the game.
Well, you bring up an interesting point. I mean, what if in a couple of years we get an administration that's very hostile once again to this entire industry? Could things really turn around?
No, it won't. It'll be too late. By the time Trump leaves office in another 3.5 years, you're going to have encoded in law all of the legislation that we currently don't have, not just the stablecoin bill that is fast going through Congress, but all the crypto legislation that's following it. You'll have the regs in place from the SEC, CFTC, and the IRS. Extraordinarily difficult to unwind laws. You can unwind regulations as an administrative act. Look how Trump easily got rid of all the Biden stuff. But once you've codified things in law, it's really, really hard to get Congress to change laws. Mm-hmm. Second, you're going to have, if you've already got 60 million US adults owning Bitcoin today, guess how many are going to own it in 4 years? It's going to be over 100 million. And Bitcoin's price by then will probably be 250,000. For a new president to walk in telling 100 million Americans that I'm wiping out the value of your crypto, they will be thrown out of office before you can blink an eye. So no, it'll be too late for any future politician to try to unwind this, especially since by then you're going to have crypto PACs with $500 million of money at their arsenal to throw money at pro-crypto campaigns and oppose crypto opponents. So no, this clock cannot be unwound.
Yeah, no, that's a really good point. Well, before we wrap up, I think I want to add a seventh mistake, and that's thinking that you have to buy a whole Bitcoin. I really am of the belief that even if you have just a little bit to allocate to Bitcoin. I mean, $20, what you would have spent on a coffee. It's important to just start somewhere, and it can turn into a meaningful part of your savings. I've seen it happen time and time again. And what we most need in this country is more people to feel economically empowered. So don't think that you need to buy a whole Bitcoin, because
You
a
know,
little will go a long way.
Natalie, I don't know if I can think of anything more important than what you just said. We've got to stop talking about Bitcoin entirely and start talking about Satoshis.
Mm.
One fundamental fact that most people ignore: if every millionaire in the world
Yep.
wanted to buy one Bitcoin, they couldn't do it because we've got 60 million millionaires, but only 21 million Bitcoins.
Yeah.
So nobody's buying Bitcoins. They're all buying Satoshis, tiny fractions of Bitcoins. And you're absolutely right. Makes it inclusionary. We are democratizing and demonetizing the value of a Bitcoin so that anyone can do this with $1. And you can do it as often as you like. You can do it conveniently, inexpensively, safely. And this is how wealth is going to be built for the millions who currently feel excluded from the financial markets, not just here in the US, but on a global basis. I totally support everything you just said. Frankly, the most important thing said on today's podcast.
Oh, well, thank you. I agree. I think it's an important message just to remind people. You could start stacking those Satoshis. Just to circle back on our initial conversation about those RAAs, what should we be looking for as maybe a next step that will usher in more adoption when it comes to wealth advisors actually recommending Bitcoin?
In the financial services industry, the asset management and the wealth management businesses, nobody likes to be first. They all like to be second. So watch for the first movers because they're hard to detect. Watch what's happening at Schwab. They are moving really fast on crypto. Look at what's happening at Fidelity, at BlackRock, at Franklin Templeton, at State Street and Invesco. These are multi-trillion-dollar asset managers, the biggest in the industry, the biggest custodians in the wealth management field. Watch what they're doing. Watch what they're going to be announcing. Pay attention to JP Morgan, Morgan Stanley, Goldman Sachs, Bank of New York Mellon, and Wells Fargo. What they're going to be announcing and launching in the months to come is all going to be the first mover status, and then everybody is going to be racing to follow suit as quick as they can to capture and retain market share. And that's when you'll know this is truly exciting.
Yeah, it's that gradually then suddenly moment that I think we're all waiting for. All right, Ric, thanks so much. Any final thoughts or what you want to leave people with?
I encourage you to read the white papers that I've written. They're all available at dacfp.com.
I'll have them linked in the show notes as well. Ric, thanks so much for sharing your time. It's been exciting to see you in the headlines. We had this scheduled and I was like, woo, good timing because of your news. So thanks so much, Ric. Hope to talk to you soon.
We'll look forward to it again. Natalie, take care.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. If you can, turn on those notifications and leave us a positive review. They really help the show grow organically with new listeners. We also have a free weekly newsletter. You can sign up at thenewsblock.substack.com. This show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.